Hey everyone, welcome back to another exciting Rocket Blocks mock interview. Today we've got a brand new case titled Nailing the Market. In this case, the client is RemodelRush, a thriving two-sided marketplace connecting homeowners with construction companies. You've been brought in to help solve RemodelRush's growth dilemma. Should they prioritize high volume and low revenue small remodels or low volume, high return major remodels? Our interviewer for today is Ben Wilson, currently a director at Alvarez and Marsal, who completed his MBA from the University of Virginia's Darden School of Business. Our candidate for today is Abigail Doekson. Abby is an ex-BCG consultant and is currently completing her MBA from Yale. So, without further ado, let's get started.
Hi, everyone. My name is Abby, and I'm here doing a mock interview with Ben. I'm currently an MBA candidate at Yale SOM. Prior to business school, I spent a couple years at BCG and worked in private equity as well. And excited to be doing this mock interview with Ben. I'll turn it over to Ben to introduce himself.
Excellent. Thanks, Abby. And this is Ben Wilson. I'm currently a director at Alvarez and Marsal, and I'll be the interviewer working with Abby today. So, Abby, got a great case. Let's go ahead and jump in. So, your client today is RemodelRush. So, RemodelRush is a promising two-sided marketplace, and they're facing a big strategy question as they grow. The company operates a two-sided marketplace that connects residential homeowners with construction companies to complete projects like kitchen remodels, roofing updates, and full home renovations. So the company's business model is to collect a fee from contractors after the project has been completed. They charge about 5% of the total project cost. And the model aligns incentives between the homeowner, the contractors, and RemodelRush themselves. So it separates the company from competitors that also charge contractors a small fee to deliver a single lead without worrying about the project necessarily being completed. So right now, the company does about 12 million in revenue per year. This is split between two different segments, though. So the first is small remodels. So think like kitchens and baths. So they win higher volume of these projects, but there's less revenue kind of on a per project basis. And then the second piece is major remodels. So think like homeowner looks to upgrade an entire home. So RemodelRush does a small volume of these projects per year, but it generates a higher revenue when it actually hits. So the company is growing, and it's clear they have a hard time serving both segments at the same time. So how do you think they should deal with this and prioritize these segments during their growth?
Great. Very interesting problem here. Just want to recap to make sure I understood or heard everything correctly. So our company is a two-sided marketplace that connects, customers that want to do home remodels and contractors who will do the remodels. So they don't do the remodels themselves. They're kind of just the marketplace, like an Airbnb or an Amazon. They collect a 5% fee of the project cost upon completion of the project. They have two major segments: small remodels, which is more of a volume-driven business where they might do a kitchen or bath remodel, so one room in a house, and then major remodels that might be you remodel your entire house. Maybe you've bought a fixer-upper and you want to remodel the whole thing. Which is more of a price-driven business. It's these large remodels that are quite pricey. And so they have about 12 million in revenue today. They want to grow some more, and they're just not sure which segment to prioritize for future growth. Is that correct?
I think you nailed it.
Fantastic. Couple clarifying questions here. When you said they want to grow, do they have a specific objective in mind? Like, is it to maximize revenue? Is it to maximize market share, hit a profit number? What's kind of do they have a specific goal when they say they want to grow?
Yeah, it's a great question. Yes, they do. So the company's aiming to grow to about $50 million in revenue as quickly as possible, kind of like everyone, right? So that would require them to grow to about 4x their current size.
Great. And then second question here, what's sort of their geographic scope? Are they global, US only? Are they certain regions in the US only? What's kind of their geography look like?
Yeah, great question. So the company operates nationwide in the U.S. currently. As of right now, I think the strategy is to remain domestic, so you can kind of like narrow your scope to that region.
Great. Thank you, Ben. If it's okay, if I just take a few moments to gather my thoughts of how we could work through this problem together, that would be great.
Please do.
Okay. So have some thoughts about how to think about the key question here, which is how can they grow to 50 million by prioritizing a certain segment? So essentially, which segment is better to accelerate growth? And there's two key buckets that I have here that I'd like to kind of analyze this problem from. One is internal company factors, and two are external, market factors. So first, sort of starting with internal company factors or metrics, I'd like to look at kind of A, the financials of each segment, and B, kind of the operational requirements of each segment. So A within financials would be looking at things like what are the historical revenue growth trends of each segment? If one's growing dramatically faster historically, maybe we prioritize that one because it just has more growth potential. Or also what's kind of the gross margins of each segment. So you probably don't want to prioritize growth in one that's negative margins. So just that's a consideration there, even though they're focusing on growth. The other thing, it would maybe be helpful to look at per unit metrics, right? So getting a sense of, okay, a small remodel, what's the that when you talked about it, volume versus price driven, they're just different segments. So just getting an understanding of how different they are will help us kind of understand if which one might be easier, right? Because if it's major remodels are huge whales, it's like one customer a year, that might just be harder to grow. So just understanding those per unit metrics. And then B, kind of the operations. The key thing I'd be looking for is kind of the ease of scalability. So this might be, is it how much people or service is required to grow the segments? Do they have to make any investments in technology or their sales force? Like which one may have a lower investment requirement, because that could make it easier to grow. So that's kind of within internal, the two key things I'd like to look at are just A, it's some financials, and B, some operational requirements of the segments. So that's kind of internal key metrics. I think the second, when I talk about external, I think A, looking at their competitive environment would be quite helpful. And then B, looking at kind of their customer relationships or their customer perceivability by their customers of their kind of value prop. So if I think about A, their competitive position, key things is there one segment where they have maybe higher points of differentiation, where it'd be more easier for them to kind of differentiate and win against competitors? Because if they have that differentiation, they can carve out a niche and maybe grow a bit more in one segment. The other thing may be looking at market share trends, so kind of understanding who are their competitors, what's their market share look like over time. If they're gaining share in one segment, maybe they have, that's a trend that they can kind of fall on for future growth. Also just win rates of each segment, which is sort of related to market share. Understanding if they're winning more in each segment, they're probably better competitively positioned in that segment, and that might be a better segment to grow. So that's kind of from the competitive side, things I'd like to look at. And then from a customer side, somewhat similar to differentiation, but what's their customer satisfaction look like? Do they have higher NPS scores in one segment? Do customers, like one segment of the business better? Because if customers are happier with one segment, that's probably more of a differentiator for them, or signals that they have more of a differentiating power in that segment, which will make it easier to grow. The other thing is just sort of pricing power within each segment. Do they have, pricing power that could help drive growth? And then kind of upsell potential as well within each segment. So is there one where you can maybe sell more? You can help play a part in the remodel, selling higher priced goods or scaling the project up so that if they get 5% of the fee, the larger the total project cost, the more that revenue they will get. So kind of that upsell driving potential. So those are the factors I'd like to look at. In terms of prioritization, I think it makes the most sense to start with the financials of each segment and just sort of understand those, and would love to kind of dig into that if you have any data you could give me on financials.
Yeah, I think fantastic approach and certainly a great way to start. So let me go ahead and share my screen. Certainly let me know if there's any issues in terms of visibility, but going to show exactly kind of what you're looking for, which is those financials. the following data on both segments is presented. Would love to get your understanding of kind of walking through and the purpose.
Yeah, definitely. So just confirming what we have here is it looks like we have some metrics for large remodels and small remodels. We have some data on, average product size, time to complete, segment performance. So this looks like revenue data, and profit data per segment. If you could just give me a moment to quickly read this chart, and would love to kind of come back with some insights here briefly.
Please.
Yeah, so just looking at this chart, I think the first thing that jumps out is this confirms some of the information that you already told me. Just we have a data, confirmation of that small is more volume driven, just given by the number of, projects won and customer requests, and large is, more price driven, just given that they have smaller projects won. But so for example, it just confirms some of the data you already told me. But beyond that, I think my three key insights from this are: one, we have a revenue breakdown here, which we didn't have before, that small is about 60%-ish of revenue and large is 40. So small is already a bigger portion of our business. So maybe we're doing better in that one. Maybe we've done better in that one to just grow it a little bit larger so far. The second insight is the gross margin. Small is also kind of a higher gross margin per segment, which signals a couple things. It might be less people driven, more automated, et cetera, also easier to scale. That's just a hypothesis, but if small has higher gross margins, I think a large, input into gross margins is people costs. And if small has a higher gross margin, maybe it's, less people dependent, easier to scale. So that's the second insight. The third one is looking at the win rates. Our win rate in small is 3x plus the large remodel win rate, which that just sort of jumps out to me as, maybe small, we have a better competitive position. And likely it might be easier for us to win against competitors with small. But those are kind of my three key insights. And based on this, it just seems like small. My hypothesis is that small might be a better prioritization for growth, given it's our main segment. Today, it's higher gross margins. We have a higher win rate. But I think we probably have to do more analysis to confirm that. But that's my kind of thoughts looking at this chart.
Yeah, and I think fantastic insights. I'm going to leave this up, but certainly have a very targeted question. So, given the data that you see here and that you've been able to kind of pull out, how many customer requests for each segment would the company need in order to receive to generate 50 million from that segment alone? And if you could estimate the company's market share, what it would be in each segment if they hit those numbers, that would be fantastic.
Yeah, definitely. So we want to estimate, the number of customer requests to hit 50 million in each. So my idea of how to solve this is we want to take the 50 million divided by kind of the revenue they get per request, and that will get us the total number of requests they need to get. So the key thing we have to solve for that first question is revenue per requests, which will just be, I think, to estimate, we could take total revenue today divided by the total requests per segment, and that will give us kind of a revenue per request for each segment. So I think that's kind of how I'm going to approach the first problem here, and I'll do it by segment quick. Let me just structure out. Okay, so we're going to do large. We're going to do total rev of 5.4 divided by number of requests. And then for small, we're going to do the total rev of 7 million divided by number of requests today. So I'll just solve those and we'll solve those, then divide that by 50 million, and we'll get to the answer to your first question. So starting with large, we have 5.4 million of revenue divided by 12,000 requests today. I'll simplify that down. We have about 5,400 divided by 12. So I think given that it's close to 5,400 divided by 10, so it'll probably be just shy of 500. So just shy of 500, I'm just going to say that is going to be about $450 of revenue per request. Then if we take the 50 million we need to hit, so 50 million divided by 450, that's kind of the equivalent to 500,000 divided by 45. So we know our answer is going to be in the, or 5 million divided by 45, apologies. So we know our answer is going to be in about the 100,000s. 5 million divided by 45 is kind of the first couple digits there are 10/9, which is about 1.1. And if we know it's going to be in the 100,000s, our answer is 110,000 requests for large. So they would have to do 110,000 requests, or 10x what they're doing now to hit 50 million in the large remodels. And then if I move on to small, following the same math, we have 7 million in revenue divided by 25,000 requests today to get our revenue per request. That is, it's also going to be in the hundreds. And 7 divided by 2.5 is equal to about 14 divided by 5, which is just shy of 3, or it's equal to 2 plus 4/5, which is 2.8. So our answer is $280 in terms of revenue per request. If we then take 50 million, which is the total revenue we want to hit, divided by 280, I'm going to round here and say 50 million divided by 300, which is going to be about 5/3. So that is 1 plus 2/3, or 1.6. So our answer also in the 100,000s will be 160-ish thousand, maybe 165,000 requests to hit the 50 million. So another, you need to scale up that small requests a bit as well, but it's a bit less than the 10x for large. But the answer to your first question, 110,000 requests for large to hit 50 million, assuming our win rate and et cetera stays constant, and then 160-ish thousand for small, assuming our win rate and it stays constant. So that's the first question. And then you said market share for if we hit these numbers. So market share we could either do on a dollar basis or a unit basis. I think just for today, I'm going to do a unit basis out of simplicity, assume that all competitors charge the same amount, just given we don't know enough about other competitors right now. So in terms of market share, we have to take the number of jobs we win divided by the total jobs possible, or the total, jobs in the US. As you said, their scale was US. So if we start with large, for total number of jobs win, if we said that they have requests of 110 and their win rate is 5, the numerator is going to be about 5,000. So that's how many jobs we're going to estimate they win for large if they hit this 50 million number. And then for the denominator, total jobs in the US, thinking through this, I think we'll have to take an assumption here. So total jobs in the US, if I estimate the US population is 330 million, say about an average household is 3 people. Some people just live with a partner, some people have children. So about 100 million homes. And if a total remodel per family is done, every 30 years, about how long a mortgage is. You buy a house, you remodel it, and you hold on to it for 30 years. So I'm just going to estimate there's about 3 million total large remodels in the US per year. So our 5,000 numerator divided by the 3 million denominator, it's very small. It's less than 1%, a fraction of that. But I'm just going to say it's less than 1% from a rounding perspective, which signals to me this is a highly competitive space on large, given our market share is so small. I think moving over to the small side, similar, we need to do the numerator number of jobs 1. So if we calculated about 160,000 requests to hit 50 million if our win rate is about 16%. 10% of 160 is 16, plus 5% is 8, plus 1% is 2. So that's about 26,000 number of jobs we win is an estimate for 160,000 requests. And then for the denominator, so we estimate there's about 100 million homes in the US. If we assume a small remodel is done about every 10 years, that would mean that there's, about 10 million small remodel jobs annually as an estimate. 26K divided by 10 million, or 26,000, jobs won divided by 10 million total jobs in the US. Again, that gets us to less than 1% market share, closer to 1%, so about 1%, but still it's very small. So from this, I think we can infer that both spaces are highly competitive, but we maybe have a slightly larger market share in small, but broadly it's a highly competitive space is my insight from that.
Very good. And appreciate kind of how you broke that down into the two questions. Completely agree with, the assumptions, the analysis you're getting to, incredibly competitive space. So how might the company's product and customer experience differ depending on the segment it chooses, kind of between that small and large where you've been diverging between? And what are the implications of these differences?
Yeah, definitely. So how would the product and customer experience differ? So I guess starting with the first one that we talked about, which is large. So this is, a high price driven business versus volume. So a couple things from a product standpoint, it's likely more sophisticated jobs. So you would have to have a marketplace that could handle, more sophisticated customization options, more sophisticated, collaboration options. If they're working with a contractor for a year, you need to be able to keep in contact with the contractor and manage multiple requests from the contractor. For example, what sink do you want? What closet type do you want? There's just many different requests with a large remodel. So I think from a product standpoint on large, it's just going to be a more sophisticated tool or marketplace platform that you'll need likely. From a customer experience standpoint, given these are high priced projects, they'll likely value, quality of service and, how quick are our people to respond to them, et cetera. If they're spending a lot of money on this project, they want, a marketplace tool that works very well and is clean and is neat. It's just, it's an expensive thing. And if people are spending a lot of money on a large remodel, I think the tools they use, they have probably higher expectations for. So I think from that standpoint, the service aspect, if there's anything, that customers have requests, they can't do it in the tool, it's probably more people driven. So they're just going to probably need more support or service for the large remodel segment to ensure customers can do everything they want in their app. And that also goes back to our chart where we saw that large had a lower gross margin. That's kind of my hypothesis is connected to this. It's just a more people driven, service oriented business. That's from the large standpoint. From the small standpoint, if it's, a volume driven business, from a product standpoint, they need a piece of tech that's very scalable and likely more automated because they're not going to be able to handle, one-on-one requests from customers as easily. Or if the app goes wrong and you have a lot of people using this marketplace, or the tool goes wrong, apologies, a lot of people are using the marketplace, it needs to be able to work. So you don't get a bunch of, errors or service requests. It's just, I think they'll value speed. So scalability and speed from a product standpoint are very important. And from a customer experience standpoint, I think small, they'll probably, similar to the product, just they'll value a seamless experience. They'll just want it to be very fast, do work well and not disrupt their project, because I think if you're remodeling a bathroom in your house, it's very disruptive and you want it done as fast as possible, and you don't want the marketplace tool to in any way, disrupt that. So I think just speed of service is the core there. So if I think about the implications of this from a large, if it's more kind of large priced projects, service required. I'm envisioning it more as like a tech-enabled services platform, which is less scalable than, small, which I'm thinking is more a tech platform, right? Like the platform can just be scalable, it can handle large volume, et cetera. It's more automated. And so from that standpoint, I think from a scalability standpoint, smaller might be a better fit is my hypothesis here. But looking at these factors, but again, would probably need some hard data to confirm that, as these are just my hypotheses for now.
Yeah, no, and I think fantastic idea, certainly fantastic hypotheses. So right on with where we're expecting. What are the major risks associated with either segment? Certainly some benefits that you've really hit on for both of them, but would love to understand some of the risks associated with it.
Yeah, definitely. So from the large standpoint, I think a couple risks jump out. One is the, you know, lack of competitive scale here. If they don't have scale, I think they're just going to face intense competition from potentially higher scale players who may be able to lower price, et cetera. Just given that they have a low market share, it signals highly competitive. That brings up a bunch of risks. The second thing is the lower win rate here. So similar to, okay, it's highly competitive and they have a lower win rate. That just signals that it might be harder for them to grow in this segment from a competitive standpoint. I think a third insight from large is just going to be that it's more price driven. So it's kind of like customer concentration risks maybe apply. So you have a risk of, if you don't get your target of one giant whale customer in that year, are you going to miss your revenue target? And so you're just dependent on super large wins, and you have less kind of opportunity to make those up. If your budget is one or two, I'm making this up, but if you have to do one or two super large remodels to hit your budget number, that can, be tricky. If you miss just one, you could be way off your budget. So I think there's just, given that it's not volume driven, it's more large price driven, those sorts of, whale customer concentration type risks apply here. From a small standpoint, I think, a couple things. One is the competitive environment as well. It's a highly competitive space. That also applies here. The second is the volume dependent business likely means customers might be more price sensitive. So you can't kind of pull pricing levers as much. You're just going to try to hit volume. And so that is a positive given the customer concentration risks that we just mentioned for large, but also if you want to raise pricing as a lever for growth, it's probably going to be trickier in this segment. And I think the other thing for small is just given it needs to scale quickly, it's a volume driven, there may need to be some investment in tech or the platform before you can kind of scale this up. But I guess, yeah, those are the key risks here. And based on that, they both have risks. So based on the risks, I don't know if I have a key hypothesis as to which segment is better or worse.
Yeah, fair. Well, the CEO for RemodelRush is en route. Given that you kind of led this analysis throughout, would love if you could provide a conclusion to her and kind of your initial thoughts and what the direction you're thinking is.
Yeah, definitely. Just give me a moment here to look back at some of the notes of the analysis that we did, and then we'll share kind of a recommendation shortly. Great. So I think you asked us to answer the question of how can we help grow this business to $50 million in revenue by prioritizing one of your two segments for growth. And based on our work, we're recommending that you prioritize the small remodel segment for your future growth. We got to that conclusion by doing some data analysis of kind of per segment metrics and thinking about the risks of each segment. And based on this analysis, three things sort of jumped out. One, small is our core business today. It represents a greater proportion of our revenue, which means we're maybe better skilled or equipped to grow that one in the future. It's just our core segment today. So doubling down on our core might be a good idea. The second thing is that the small has a better financial profile in the sense that it has higher gross margins. We have a higher win rate in that segment. Kind of, if we think about key financial metrics of the small segment, I think it just is a more attractive business from that standpoint. And the third thing, I think, given that the gross margins are a little bit higher, we hypothesize it's a little bit more automated, and so it's likely going to be easier to scale and grow, because we want to grow. It also has to be kind of feasible, and based on our analysis, our hypothesis is that small is going to be kind of more feasible to scale. And so based on this, we'd love to, recommend that you prioritize growth with small, but understand more work will likely need to be done as to best how scale the small business. And we'd love to sort of help you do that further work as well. But our recommendation today, in short, is we recommend you prioritize growing the small remodel segment of your business.
Excellent. Abby, fantastic. Really appreciate your help with this case. Thank you.
Thank you so much, Ben. It was great.
Hey everyone, it's Kenton Kavesky here, the founder of RocketBlocks. Thank you so much for watching this mock interview video. I hope you found it informative and helpful as you are getting ready to prepare for your own interviews and hopefully landing that job offer you are excited about. We have a ton of great content on the RocketBlocks channel coming out on a weekly basis, mock interviews, mini lessons, and chats with our RocketBlocks experts. So if you haven't subscribed yet already, please do so. There is a big red button below. And if you hit that, you'll get all of our content as soon as it comes out. Thanks for watching and have a great day.